To those of you with us in person today and to the hundreds of you online, hello. We're delighted to celebrate the life of the Reverend Dr. Martin Luther King Jr. with you and to welcome you to this, our fourth annual An Economy That Works for All convening. At the New York Fed, we're committed, as so many of you all know, to an economy that works for all segments of society. But for many Americans, the cost of housing is beyond their reach, and so the economy doesn't feel like it's actually working for them. It's a disappointment. So at today's An Economy That Works for All convening, we're training our attention on the very topic of housing affordability. And given the tragedy that's unfolding and continuing to unfold in Los Angeles, and our hearts go out to our brothers and sisters, family and friends, those we don't know in Los Angeles. Given the unfolding tragedy there, this topic takes on significance. My name is Otho Kerr. I'm a director here in community development. I'm going to be your MC today. My remarks and those of the participants are our own and don't necessarily reflect the views of the New York Fed or the Federal Reserve System. This is a 2-hour event with no breaks or Q&A, but you'll have a chance to meet with the participants, connect with some of the other attendees at our reception. We invite you to join our reception immediately following this event outside the auditorium. Every year, in honor of the life of Dr. King, I take a few moments to listen to or read his I Have a Dream speech, a work of art to me that moves me at times close to tears because of its import to me, to my family, to other families of color, and to other historically marginalized communities. In his speech, Dr. King says, "So even though we face the difficulties of today and tomorrow, I still have a dream. It is a dream deeply rooted in the American dream. Dr. King's dream, in which he wants freedom to ring from the prodigious mountains of New Hampshire all the way down to every hill and molehill of Mississippi, goes well beyond housing. But housing is seen to be, by many Americans, at the core of the American dream. Today, we honor Dr. King's dream by leaning into, at a very high level, understanding what the issues and solutions are to the housing crisis in the United States. So let's get started. I'd like to introduce you to the 11th president of the Federal Reserve Bank of New York, John C. Williams.
Well, good afternoon, everyone, and welcome to the New York Fed. It's wonderful to see so many of you here in person, but also, of course, many hundreds online for the fourth event in our Economy That Works for All series. The New York Fed is a mission-driven organization, and these gatherings go to the very heart of our mission, which is to make the United States economy stronger and the financial system more stable for all segments of society. Now, in prior years, we've used these events to discuss issues like equitable growth and low-income home ownership. Today, we're going to talk about a topic that comes up in almost every conversation I have, whether with business, government, or community leaders throughout the Federal Reserve's second district, and that is housing affordability. It is not an exaggeration to say that this is the #1 economic topic in our region today. Before I go further, let me give the standard Fed disclaimer that the views I express today reflect are mine alone and do not necessarily reflect those of others on the Federal Open Market Committee or in the Federal Reserve System. So housing affordability affects different groups in different ways. For households, it encompasses not only the cost of buying or renting a place to live, but also the ways those costs affect the lives of individuals and families. If rent or a mortgage payment takes up most of a household's income, affordability becomes unaffordability. This creates ripple effects that can impact the ability of a household to afford other essentials, such as food, clothing, transportation, healthcare, childcare, and so much more. The repercussions reverberate through all aspects of our economy. Housing affordability affects the ability of communities to attract businesses, and it affects the ability of employers to attract and retain workers. and to grow their businesses. As an economist, I naturally think about economic issues through the lens of supply and demand. Imbalances between supply and demand not only affect inflation and employment, but also access to housing, healthcare, childcare, and broadband. So restoring the balance between supply and demand is one of the biggest challenges faced by policymakers at local, regional, and national levels. So look no further than our own experience over the past 5 years, when the pandemic and its aftermath delivered enormous shocks to the economy. New York City and this region were hit particularly hard. Businesses closed, unemployment surged, and many people who were able to work remotely moved away. But today, it's a very different story. As the economy came back into balance, businesses reopened, we more than recovered the jobs lost during the pandemic, and the demand for housing has surged. But the recovery has been uneven. With regard to housing, demand today far exceeds the available supply that contributes to high costs and limits the ability of our region's economy to reach its full potential. Meeting this demand is critical to achieving sustained economic prosperity. And that's what brings us here together today. The New York Fed's efforts in this area are shaped by 3 verbs: connect, convene, and catalyze. We connect stakeholders with the latest data and research. We convene the stakeholders in forums such as this one to share best practices and to share our thought leadership. And we aim to catalyze action. To that end, you'll hear more about the impact of higher housing costs on individuals in our communities. We'll discuss best practices that can help increase the supply of housing for low and moderate, middle-income families, as well as help them manage the burden of housing costs. The goal is that these discussions will help identify promising solutions that will help tackle the housing affordability problem. Now, we have a number of terrific speakers and panelists. I want to thank all of them for their participation in today's event and their dedication to this important work. So, without further ado, let's get started.
The government data would suggest that inflation and unemployment year on year are coming down and that the American economy is doing well. But at the end of 2024 and even today, there are a lot of Americans who just aren't feeling it. According to our next speaker, Kyla Scanlon, we are in, and perhaps, or we were, and perhaps still may be, in a vibe session. Kyla Scanlon is a popular financial content creator, educator, and author, publishing her first book last spring called In This Economy? How Money and Markets Really Work. Welcome, Kyla Scanlon.
Thank you all. I'm super excited to be here today. I've never actually been inside one of the Federal Reserve buildings, so it's actually a very exciting moment for me, and especially to talk about something as important as housing affordability and access. So I flew in today from Los Angeles, California, which is where I spend quite a bit of time. And as I'm sure everybody knows, wildfires have completely ravaged the hillsides there. They've ravaged the city, and they have displaced hundreds of thousands of people, and thousands of people have lost their homes. Hundreds of thousands of people have lost power. It really is devastating, and it's kind of that type of devastation that you can't really explain until you experience it. And everybody there is getting a crash course in what things like property insurance mean and the importance of things like that. It was a similar story with Hurricane Helene that happened last year, which devastated Asheville, North Carolina, and many more people lost their homes during that event as well. And I think with things like this, it's sort of where human language begins to fail us, because how do you actually talk through hundreds of people, thousands of people losing their homes? And something that I've mulled over quite a bit over the past few days when processing this is the word compassion. And there's a book called The Unbearable Lightness of Being. And in that book, the author writes this about the word compassion that I think is quite important. And he writes that all languages derive from Latin. All languages that derive from Latin form the word compassion by combining the prefix with, cum, and the root meaning suffering, passio. In other languages, this word is translated by a noun form of an equivalent prefix combined with the word that means feeling. To have compassion is co-feeling. This kind of compassion therefore signifies the maximal capacity of effective imagination, the art of emotional telepathy, and the hierarchy of sentiments, then it is supreme. And I think with things like what's happening with Los Angeles, what happened with Hurricane Helene, what happened with Hurricane Sandy, is all we really can do is have compassion. To describe the loss in words would actually probably be doing it a disservice. It's not really something that we can quantify, it is only something that we can feel. And that idea of co-feeling is actually a very important part about this housing conversation. Because while I've just talked about the acute crisis that's happening in Los Angeles, California, millions of Americans are actually experiencing a different type of housing crisis every single day that we'll talk about today. One that is less visible, but probably just as devastating to their lives and communities. And the reason that it's so profoundly painful is because a home is very important. These are places where people get married, where they have children, where they live with their roommates maybe, or maybe they care for an aging parent, or maybe homeschool, or run a small business, or foster pets. A home is a foundation for how we interact with the economy. It's the foundation that we wake up in each morning. It's the foundation that holds all our things. It's the foundation that we get to return to after a long day. It's our anchor in a world that just can't seem to stop getting rocked by waves. It's a place to live in every sense of the word. But the ability to secure and maintain this foundation has become increasingly challenging for everyday Americans, as most of you know. It is profoundly unaffordable in many states to rent or to buy a house. Housing costs have risen dramatically, outpacing wage growth in many cities and making both home ownership and rental housing quite unaffordable for many families. And this crisis does look different depending on where you live in America. I know we're here in New York City, but it depends on Los Angeles, it depends on Austin, Texas, it depends on Minneapolis. In coastal cities like LA and New York, we're seeing extreme competition for limited housing stock, driving those prices to astronomical levels. It's the law of supply and supply and demand are definitely winning. In the Southwest, it's cities like Phoenix and Las Vegas. They're grappling with affordability issues while also trying to figure out climate resilience, a problem that Los Angeles is going to have to face as they rebuild. The Southeast faces its own challenges with rapid population growth and natural disaster risks as well, while the Midwest struggles with aging housing stock and urban renewal needs. The city that I grew up in, Louisville, Kentucky, is running into this problem right now as well. Even in areas that have traditionally been more affordable are starting to be not so affordable, like some Texas cities, because rapid growth is creating new pressure points in the housing market. So if you're trying to buy a home right now, it's extraordinarily difficult. I don't know if anybody's going through the process, but it's hard. You're dealing with mortgage rates that are north of 7% depending on the day, and they were like 2 to 3% a mere 3 years ago, and housing prices that have tripled since the 1990s. As of November 2024, the median sales price for all single-family homes in the U.S. was almost $400,000, up $10,000 from the previous month and a 4% increase from the previous years. A lot of numbers to say that things are indeed getting quite expensive. And all of that is slowing down, right? Like things are not as bad as they were. We're starting to see some stabilization in the housing market, but homes are still outpricing wage growth in a lot of areas. I think this is one of the most alarming statistics that I've ever seen. It was from a Bloomberg report, and it was between December 2020 and December 2021, the median US home gained $52,000 in value, and in 11 markets, it grew by over $100,000. So over the course of a year, this house went up by $1,000. That's just unsustainable. And so even if you're not trying to buy a home like me, I'm a renter, rental prices have risen quite a bit, more than the cost of a home, moving at the same pace or faster than the cost of a home, moving at the fastest pace in 40 years at some points. Rents went up by more than 15% between May 2021 and May 2022, and thankfully, they've cooled in some cities, especially cities like Austin, Texas, who have done the bold thing of building more housing. But with natural disasters that will cause mass rebuilding and years of lack of expanded supply, we will have to face the bleak reality that the American dream of having a stable place to call home, whether owned or rented, does feel increasingly out of reach for many, something that the panelists and speakers will talk about solutions for later today. It's not all doom and gloom. The American dream, as defined by James Truslow Adams, is the dream of a land in which life should be better and richer and fuller for everyone, with opportunity for each according to ability or achievement. But it's no secret that the American dream, at least the way that Adams saw it, might not be the way that it used to be. Stability, success, a sense of belonging. It's the figurative and literal key to upward mobility and financial security. A lot of people do design their lives around owning a home one day. And when you feel like you can't achieve that and the entire market's working against you, it just doesn't feel very good. And that's the foundation part again. Because what housing really is something much broader, right? Like it's more than just a place to live. It's kind of this mirror that reflects fundamental shifts in our economy and our society. And the housing crisis was exacerbated by the pandemic. The San Francisco Federal Reserve had a really interesting research paper where they highlighted that the move to remote work actually exacerbated housing costs extremely. 60% of the 24% house price growth during that time was people working from home. And the pandemic exacerbated all the issues that we're already facing. We saw raw material shortages, building costs increasing 50%, compounded by labor shortages and supply chain issues. With the Fed, raising rates as they had to do in order to battle inflation, it became more difficult to finance things like home construction. And it's not an easy time to try and build the American dream. There's all sorts of bifurcation in the housing market too that makes it even more complicated. There's 90% of homeowners that are locked into a fixed rate mortgage, which is great, because you're locked in and you're good to go. But it can create something called golden handcuffs where you feel like you can't move at all. And you might be house rich, but cash poor. And then there are those who are facing those extremely high mortgage rates, feeling like they have no mobility at all, or they lost their one chance to get into the housing market. And then there are those that swoop in with bathtubs of cash. Another statistic that kind of blew my mind was 70% of New York City homes were purchased without a mortgage, so basically with cash, in the final quarter of 2023. And so that makes it very difficult to compete. If 70% of people bidding on a house have all cash, if you need a mortgage, you're probably not going to stand a chance. And almost 40% of homeowners have no mortgage at all. They have it totally paid off, which is awesome and really good for them. That's roughly 32 million people, mostly Gen X and boomers. They are also locked into their home and really don't show any desire to leave, obviously. Mortgage rates are quite high. Almost 80% of these people plan to remain in their current residence until they retire. Boomers own 28% of 3+ bedroom homes, which is twice the share owned by millennials with children, who own just 14.2% of those homes. So there's a little bit of issue with housing mobility in terms of who's inheriting what homes and who's having a bigger home for their families. There are, of course, other issues like zoning and NIMBYism, which makes it difficult to build more homes as well. Ideally, everybody could stay in their homes as long as they want, and we just have enough homes for anybody who wants one. However, we have strict laws on what can be built where, and even if things get permitted to be built, there tends to be a chorus of no thanks from homeowners in those areas, something LA is really going to have to navigate over the next few years. Part of that worry is wealth preservation, because a lot of people have a lot of money locked up into their house. And it gets into the very confusing part of the housing market. Derek Thompson, who's over at The Atlantic, he's one of my favorite authors, and he summed it up very well when talking about the role that housing is supposed to play in our lives. In the US, our houses are meant to perform contrary roles in society, shelter for today and an investment vehicle for tomorrow. This approach creates a kind of temporal disjunction. He's such an excellent writer, I've never heard those two words together, around the housing market, where what appears sensible for one generation, please no more construction near me, it's annoying and could hurt my property values, is calamitous for the next. Wait, there's nowhere near me for my children to live. And that's the crux of the crisis. We have this inherent push and pull between housing being a wealth generational tool for some and then being something that we're supposed to live in and build community around. It's quite confusing. And many policies are being implemented to fix the housing crisis. It's really impressive what policymakers have managed to achieve over the last several years. But we have all these variables of just being a human, like status anxiety, the dual role of housing in our lives, housing as potentially a retirement account for some, the persistent issue of wealth inequality, the constraints on economic growth and labor mobility, longer commute times and sprawl, and maybe a lack of innovation. The core fact of the housing issue is that we basically just need more of it, and we need more supply. But there needs to be an evolution of regulations in order to make that happen. In the Housing Theory of Everything, which is one of my favorite articles from the team over at Works in Progress, they talk about housing shortages and lack of affordable places to live as not just a shelter problem, but an inequality issue, a climate change catastrophe, a productivity nightmare, a contributor to unhealthiness, and perhaps the reason we have falling fertility rates. They state this at the end of the piece. If we're right about this, it means that fixing this one problem can make everyone's lives much better than almost anyone realizes, not just by making houses cheaper, but by giving people better jobs, a better quality of life, more cohesive communities, bigger families, and healthier lives. It could even give renewed reasons to be optimistic about the future of the West. And so that's huge. They're staking the flag of the Western future on us simply building more housing. And a lot of people do agree with them. I'm sure some people here in this room do. Lowering housing costs creates many downstream benefits and frees up a lot of money. There was a Bloomberg City Lab from Richard, Florida that talks about, look how much money from today's society is going into rising land costs and real estate prices and housing values, which means that, and I quote, "The central contradiction of capitalism today is that a huge share of its productive surplus ends up being plowed back into the dirt." A lot of people say that it's time to build with startups. And it's kind of a cliche at this point, like if you ever scroll on Twitter, a lot of people tend to be saying that. And it's almost contradictory because it's so focused on bits instead of atoms. So we're so focused on our digital future, AI, technology, automation, that we tend to forget that our feet are planted here on the ground. But here, it really does apply. In reality, allowing more housing would ultimately allow more people to build like what people want. We need atoms. And AI might be able to upzone local communities and fashion triplexes sometime in the future, but it's really not doing that now. We need to build communities and to help our people. More housing would remove our social and structural isolation, connect us to one another, and make people have hope, potentially, in the American dream again. The panels coming up today, I'm very excited to listen, will dig deeper into these challenges and potential solutions. We'll look at things like affordability metrics, supply constraints, and equitable access, all the pieces that we need to solve this very complex puzzle. Thank you so much.
Thank you, Kyla. It's wonderful. Thank you, Kyla. I was a fan before, but I'm an even bigger fan of Kyla's. Kyla, if people want to follow you, how do they do that?
I'm at Kyla Scan on basically everything.
Thank you, Kyla. So our next panel is going to, at a very high level, address the housing issue, talk about some solutions, but for a little ground leveling, we're going to have Raul Cabrera speak with us. Raul is going to give us a TED Talk. He is the broker of record for the Community Asset Preservation Corporation and is responsible for managing all property and sales and purchases for the New Jersey Community Capital. Thank you, Raul.
Thank you. Hello, everyone. Good afternoon. It's a great day to be here at the Federal Reserve Bank of New York. It's a great pleasure to present here, and I hope to impart a valuable piece of knowledge that you could take not only right now, but perhaps share it with your community or somebody that may need this information. My name is Raul Cabrera, AKA Raul the Realtor. This right here is what we're talking about, achieving this. This is the American dream. It was not only my dream, but for many other clients that I work with. My motto and our motto is, every family deserves a home. A home like this, somewhere where they're dignified. When you come home, things are in working condition. As you can see in this picture, this is one of the products that New Jersey Community Capital deliver to a family. In here, we see paint, we see a kitchen, we see a stove, but to somebody that purchased this property, it became a home and not a property. And this is what we're talking about. We're talking about achieving our home dreams, a dream. Why is it a dream? One, because affordability. Let's face it, it costs money to get yourself into your dream. There are programs available to help achieve that gap, and I'm going to talk about bridging that gap, using the funding from the bank, but also using down payment assistance that's available to buyers that qualify. I'll also show you through some images that, yes, it is possible, and you could obtain it. And obtaining that dream, it takes grit, it takes determination. It is hard, but it's achievable. I know that for most of us, it's far-fetched, it's far to grasp, but it's closer to you than what you think. The next slide shows another home. This home was special because it provided a driveway long enough that a truck driver was able to purchase this home. Now, what did it allow him to do? It allowed him to establish his business, because if you drive a commercial truck, your truck is your business. You can't just leave it anywhere. So this home allowed him not only to establish his dream, which was to own a property or own a home, but not only it did that, it also allowed him to park his business inside his property. What did that do for him? Well, that eliminated a monthly cost that he had to pay to park his truck. Now, that helps him pay his mortgage. It helps him obtain something that could be given to somebody else. If he does decide to sell it in the future, he's not renting any longer. If you rent, you leave, and that's it. You take maybe your security deposit if you haven't caused any damage to the property. But guess what? He sells in 5 years. We're talking about the equity increasing. It is a benefit, because when he sells it, now he has equity that he grew in this property that he put all his sweat equity into. Now he's able to transfer that, or maybe keep it and buy something else with this same property. Because you could take equity from this property once you build it and buy yourself something different. So that's what we're talking about, this vehicle, that it transforms your life, but it also elevates you into a different economic status. Maybe not right now, but in the future. It's the only vehicle that builds wealth for our community. And it also keeps us in place in our communities. So the next slide also shows a home. This home was special because it came with a down payment assistance. The purchaser of this home was able to afford a cheaper mortgage. This home was $400,000. It was affordable. You see parking, you see a backyard. That's what we're talking about. A lifestyle. You know, changing your lifestyle, propelling you to a different life style, health, your children's. If you decide to build a family, this is where it starts. Not at the property level. It starts at the home. And the next slide shows what it looks like in the inside. So this is where people build memories. You know, Christmas time, they're not remembering the time where they couldn't achieve it. They're remembering those memories that they built in this vehicle. 10 years from now, maybe they don't remember the struggle that it took for them to go in here and to start that journey, because it is a journey. For most folks, they don't have the down payment together. They don't have the W-2s together. They don't have all the items together. But I do know one thing. If they have the desire to do it and they want to achieve this, that's what we do. We help them achieve this. This is a multifamily option. The reason why I'm showing you this one is because it's in our backyard. Our brokerage is in New Brunswick, New Jersey. It's owned by New Jersey Community Capital. They developed this property from zero, meaning from the lot level. It's a two-family, which allows the purchaser to live in one of the units, but it also makes it affordable for them because now they become landlords and rent the other unit. So what does that do? If their mortgage is, let's say, $3,000, they're getting $1,500 in rent. Now they're able to save some money. And then also, it's income. So let's say that you bought this as a end user, and you're starting out here. You are immediately walking into equity. Because let's say if your income is 50 and this brings another 40, you're at 90. And most of the stuff that you do to this house, you could deduct it with the IRS if it's, improvements and such. So this is what we all want, and we want to achieve this. And to achieve it, it takes, like I said, it takes grit, it takes continuity, because a lot of people give up in the middle of the process just because they don't have the right paperwork or they don't have the down payment assistance together. But there are programs out there that give $25,000. There are banks out there that give down payment assistance to help with the purchase of something like this. And then there's this. This was a client. She was like about 22 to 23 years old, recent grad that had a dream. We're talking about just imagining what's possible. But it is possible. It's here. We've done it hundreds of times. But it takes that single step that I want to be able to do it. Talita, she worked at the Section 8 office in Jersey City. It was a great dream for her. She didn't know how she was going to buy a property in Jersey City, but she wanted to. When I met her, I remember like this day, it was in the summertime. She came in her bicycle with her boyfriend. And I was like, oh, we're going to go see some homes. I told her, just throw it in the back of my car. I'll drive you guys around, because we're not going to get there in time if we bike over there. So it took months. It wasn't easy, because she didn't know what to expect as a landlord. She didn't know what to expect as a first-time buyer. She only had the desire. And it was my job to make that real. So we got her down payment assistance through our Address Yourself program. So we got her $20,000 to help purchase this property for her. Not only did we do that, we also found her a tenant. So when she finally closed on her property, she had a tenant in place, which was already income producing. What did that do for her? It transformed her life. It started her on a different path, on a different journey. And that's what we're talking about here, the homeownership journey, achieving the dreams. There's some of you over here that help bridge that gap and help make this obtainable. And I'm pretty sure some of you also have stories like this, but this is just one that I'm able to share with you guys. This is another story. This is a family in New Brunswick, New Jersey. We see 4 folks here, right? But only through the son this dream was possible. Because of legal paperwork wasn't there on the other 3 sides. The son went to school, did everything that he could. Parents safe, everybody safe, and collaborated. It's a collaboration. Sometimes it cannot be done alone. Sometimes we need help from family, from our government, from the bank. All these folks help achieve this for them. They lived down the block from this property that it was rehabbed and redone by New Jersey Community Capital, 20 years renting down the block. 20 years in that situation, living in a 2-bedroom. There's 4 folks in here, grown. So you could tell what it did for them. It changed and it transformed their life. It gave them a way of having a place where they could not sleep all together. It gave them a backyard. It gave them stability within their own community. And they also got down payment assistance money. The last story that I'm going to leave you with is these 4 homes. These homes were in Atlantic City, New Jersey. They're all 4 brand new homes. Our corporation developed these homes. The city of Atlantic City gave the buyers $150,000 in down payment assistance. How did these homes become affordable? Because our corporation decided that, guess what, to make this reachable for the community, we're not going to sell it for above $300,000. And we did that. These 4 homes were raffled. That one already closed, and the other one already closed. That means that there's 2 more families in place that didn't have this. And that's what we're talking about, creating more of this, helping more people get into situations like this. How do we do it? How do we do it? Well, by taking the first step, saying, okay, I want to do it. Seeking the resources that are available, which they are, through our local governments, banking. There's different down payment assistance that could allow for something like this. So think about a mortgage that's less than $1,200. Is that affordable? Yes. Average rent is $1,800 for a 1-bedroom in New Jersey. So this is less than what you would pay for rent. And that's what we do. We create this, and we are for the American dream and imagining what's possible and creating that possibility. Thank you. It's a great pleasure.
I'm going to invite the next panel to take their seats. We have 3 panels, and these 3 panels are divided up in this way. The first panel is going to be a level setting, as I said, high-level panel looking at solutions and issues to the problem of housing. Can I ask the panelists to take their seats? That'd be great. The second panel is going to be a panel that focuses on supply, which is the big issue facing the housing, causing the housing crisis. And then the third panel is going to be addressing the consumer side. We're going to still have these supply issues, but the consumer is still going to need to navigate these really choppy waters. So Andy Howitt, who's the Director of Household and Public Policy and Research here at the New York Fed, is going to moderate this panel on high-level solutions.
So first of all, let me thank you all for being here. Welcome to the New York Fed. I'm Andy Howitt, as Otho mentioned. I'm joined by Stephanie Hoops and Vicki Bean. We're going to talk about the issues that we've discussed so far that Raul and Skylar presented to us. And also, I will find my questions here, which I've already told. Also sort of broaden the focus a little bit, I think, to some policy solutions. So we've talked a little bit about some of the issues that are confronting people who are trying to afford new housing. And I guess Stephanie and Vicki, you have some slides that you're going to present that'll get us started, and then we'll go through some Q&A, if that sounds okay.
Great. So yes, briefly, I'm Stephanie Hoops, the National Director of United for Alice. And United for Alice is a national research organization started by United Way of Northern New Jersey to create some measures of financial hardship to really help us understand what's happening in our local communities where the federal poverty level falls short. So when we look at financial hardship, the standard measure of that is federal poverty level, which tells us about 13% of households are struggling. But when we look at what it actually costs to live and work in today's economy, just the bare basics in your household survival budget, another 29% of households are what we call ALICE. And ALICE stands for Asset Limited, Income Constrained, Employed. So folks technically working above that federal poverty level, but below those basic costs. And we've got all the numbers, but we all know the people who are ALICE too. And so as you're going home tonight, think about all the workers that you run into that are probably in this kind of situation. So as you're taking your public transit, as you're stopping in the bank, as you're picking up your child at childcare, as you're getting your takeout dinner, a lot of those workers are ALICE, making our economy run smoothly and yet struggling to support their own families. So we base this on a survival budget. And in this example, this kind of explains ALICE in a nutshell. The blue column is the survival budget, just those basics of housing, childcare, food, transportation, healthcare, a smartphone, and taxes. You add those up and you compare them for those costs for a family of four. This is kind of the median of the US from Franklin, Ohio, which is literally in the middle of the country. And compare that to 2 full-time jobs, retail sales and a cashier. So those 2 adults working full-time year-round can't afford that basic survival budget for their family of 4. That's the gap. The gray bar on the far side is the federal poverty level. That's the same number across the country. So in Ohio, it was about $78,000 for that family of 4 with the survival budget. The federal poverty level is less than $30,000. So you can see how out of whack that our official measure is. And we know these costs vary hugely across the country. It is not the same to live in Manhattan as it is in Mississippi. And so we're able to capture those differences, and yet that federal poverty level is the same number across the country. So in this, wait, just one sec. You can see housing is the number 1 item there, and if that housing cost goes up, this is just like fair market rent is what the housing number is based on. So you know that basic HUD amount, and if that increases, that just gives you less money for those other essentials that you need in your budget. You have to make up for it somewhere, so I think we'll talk a little bit more about that, but just to give you a visual to think about that. So I wanted to talk a little bit about grounding housing stability, and Kyla gave a great start to that. And in addition to that, your house being your home and your anchor, it's also got some economic implications. It's where you live can in large part determine where you can work, where you can go to school, whether you can do outdoor activity safely, whether there are healthy food options nearby. So some very basic fundamentals for your economic well-being. And if you think about the converse of that, instability, you live farther away from where you work, so it takes more time to get there and adds more cost. You may pay too much for your rent. You may live in substandard units that bring about some safety hazards. So a lot of dimensions beyond some of the emotional that we start with. And one more, yeah. So I wanted to talk about renters and homeowners. So most ALICE households are renters, except for older Americans. So let's start looking at the rent burden. Most folks earning below that survival budget, which we call the ALICE threshold, are either paying 30 to 40% of their income on housing or more than 50% on their income. So in total, 70% of renters below the ALICE threshold are paying too much. And that just starts the chain of instability. It also gives us a sense of the magnitude of what we're talking about. And I think it also helps explain why we're getting such different messages about the state of the economy. When you hear the overall numbers about how folks are doing, it seems to be okay. But when you break it down by above and below that threshold and you see this ginormous amount of instability, it helps explain why so many people are voicing that frustration at the ballot box, in social media, all kinds of places. So next slide. And then among homeowners, we also see some big gaps in who's able to own at all. Alice is less likely to be a homeowner. And then even within that, we see big gaps by race and ethnicity. And I think it's important to call these out. So this is actually for New York, these numbers. So only 17% of Hispanic homeowners below the Alice threshold are homeowners. 22% for Black households below the Alice threshold, and 52% for white households. These numbers are much lower than across the country. So I want to point out that a little discrepancy here in New York, and it may be in part that there are more renters, but just to note that there are important geographic differences. And then I just wanted to spend a minute on the consequences. And again, I think we're going to get to this more. But when you don't have enough money for that basic housing, we're starting to see kind of the longer term consequences, especially as a lot of the pandemic assistance has gone away. So an increase in evictions and foreclosures and homelessness. So at a time when we think, gosh, the economy is doing a little bit better, how can the number of homeless be increasing? And then you layer in some of the disasters that we were just talking about in LA and hurricanes in the South recently this past year. We have some real challenges in our country. I wanted to talk about two groups in particular that we should be caring about with these consequences. So one are households that are headed by someone 65 years and older, are older households. About half of older Americans are below that Alice threshold now. It's the fastest growing group. Kyla touched on the baby boomers. There are some really important consequences for this. And they're more likely to be owners. And this is causing some problems that we're seeing in our looking at where Alice is living and why we're having all these, the rent burden and such. And we're seeing that everybody's living somewhere right now. And when you dig into the data, there's a lot of misallocation in terms of size and rent. So we've got 1- and 2-person households living in big units. We have people with large incomes paying small rents. And so people who have certain sizes and can only afford certain rent do not have those units accessible to them. So as we think about our solutions, how do we reshuffle the chairs so that people can be in the right size unit at the right price point is one of our challenges. So with seniors kind of holding on to a big chunk of housing, how can we get that moving? And then on the other side of that, a really important group for housing stability are children. And they are probably feeling the greatest impact of this housing instability. Today in the US, about half of children live in households below the Alice threshold. And depending on whether you have 1 or 2 parents working, it's a huge difference in your likelihood of financial hardship. But when you're below the Alice threshold, you're more likely to rent and you're more likely to move. And that instability, as we know, has huge consequences for healthy development, education, and building those foundational blocks that you need to grow. So I just wanted to call out our older Americans and our children bearing some of the brunt and the challenges for housing instability. And I just wanted to share for more data on housing is on our website, unitedforalice.org. And we have an economic viability dashboard that I think for this group could be really useful. So we look at housing, but we look at it in context with jobs and work, as well as community resources. Because as you know, in starting this discussion, where your housing is helps determine so much more in your life. So we need to be thinking about housing, but we need to be thinking about it holistically. So here's a place to get started.
Thanks very much, Stephanie.
I'm going to stand up because I forgot the glasses for the eyes in the back of my head. So I'm going to just stand up and try to build a little bit on this. So I totally thank you, Stephanie, for a really terrific overview, and I just want to completely agree with all that she said about both the causes and the consequences of our housing affordability crisis, right? The housing affordability problem is leading to massive challenges in terms of housing stability, and housing stability then has enormous consequences for the health of our population, for the opportunities available for the children in those families, for the opportunities available for job seekers, for the mental health and the social connectedness of our seniors. So many things depend upon people having good, high quality, well located, and stable housing, and that's what we're really talking about. But I want to also broaden that to what the housing crisis means and the unaffordability crisis means for our cities and for our jurisdictions. And so New York City, unfortunately, over the last, since 2020, has lost almost 570,000 people, right? That is about 6% of New York City's population. It is basically 88% or 87% of the population gains that we made in the 2010 decade. So we are losing enormous numbers of people, and those are the workers that Stephanie talked about, the workers that we talked about earlier. It is the performers that make our metro area so creative. It is the inventors who bring innovation. It is all of those people that we are losing. And one of the main reasons that they give for leaving New York City and leaving the New York metro area is the high cost of housing, right? So that is as I said, our workers, our inventors, our taxpayers, and it has enormous consequences to our ability to be one of the world's greatest metro areas, and to be the vibrant, really diverse and thriving place that we think of this area being. So one of the reasons for that, and I'm going to start here, is that look at what we're building compared to what a lot of our competitor cities are building, right? Miami is building basically 88 new homes, or getting permits for 88 new homes per 1,000 residents. We down here are building not quite 24, right? And it's not just that we're not building as much as other major cities, but we're not building, I've highlighted Raleigh, for example. Raleigh's a much smaller place that we're losing lots of people to, and it's building 74 and a half homes per 1,000 residents compared to our not even 24 per capita. So we're losing enormous numbers of people, in part because we're not keeping up in order to make our housing more affordable. We're not building what we need to be building. And just looking at how we're doing compared to other places is the first step of that. The second step of that is really we're losing ground in terms of our ability, of our willingness and our ability to try to solve this problem, right? Across the country, over the past few years, over really the past decade, 20 states have adopted major land use reforms. Lots of cities have adopted major land use reforms, right? New York City has made enormous progress. We just passed the City of Yes. We've done a lot of rezoning and changes over the past really 10 years. Nevertheless, we are losing ground against all of those cities that are building so much more than we have, and we're not coming up with the kinds of solutions that we're seeing in many other parts of the country. So I want to talk for just a minute about some of those solutions, really as a challenge, right? Why are we as a metro area, why are we as a state not keeping up with what other jurisdictions are doing to try to address the affordability crisis. The reforms vary enormously, and let me just give a couple of examples. So some jurisdictions, Arizona, California, Connecticut, Colorado, Florida, Oregon, have said, look, local governments, you have to plan for how you're going to meet the needs of people at different income groups. Not just, yeah, we're going to build more housing, but no, we're going to need housing for the Alices of the world. We're going to need housing for our senior residents. How are we going to do that? What is your exact target, and what is your exact plan for meeting that need? Some states have said, we're going to do that for you. We're going to tell you on a regional basis, and of course New Jersey has been a leader on this, and Connecticut also is a leader, but New York has not been a leader. We have not said to jurisdictions, you need to help us out, meet the need by building this amount of housing, or by ensuring that in your jurisdiction there is a certain share of housing that's available for the different income groups that we're talking about. California, Connecticut, Massachusetts, Rhode Island, many states have said, here's a specific target, tell us how you're going to meet that, and let's get to work on that. Some jurisdictions have said, we're going to tell you different kinds of housing that you need to allow, because one of the problems is that our housing stock is not nearly as diverse and meeting the needs of as many different groups as it could. So many jurisdictions have said, we need to allow those accessory dwelling units, the cottage in the backyard, the apartment over the garage, the separate entrance that Raul showed us, right? And many have said, we need more transit-oriented development. We need, where there is transit, we need to build more housing to use that transit. Similarly, many jurisdictions have said, you just need to build more densely. So where you've zoned, for example, for single-family homes, you must allow duplexes, you must allow triplexes, that kind of thing. Florida has said things like, you can build any mixed-income, mid-rise size apartment building at 50% larger than the biggest building that can be built in the jurisdiction, right? Things like that are making a huge difference across the country. Of course, one of the barriers to building more housing is the processes that we require, and many jurisdictions are taking big steps to try to streamline those processes, make them less subjective, make them have an end, reduce some of the veto points, and really get out of builders' way to allow more housing. One of those is, of course, to reduce or streamline environmental review. And then there are specific things that need to be tackled, like many jurisdictions, one of the major barriers is parking requirements, and they are reducing their parking or even eliminating parking requirements. New York City has made some steps in that direction, but the rest of the state has really not. And then mandating zoning for certain kinds of land owned by religious organizations, nonprofit organizations, land owned by different kinds of government organizations like the transit agencies and those kinds of things. So we could talk all day about the specifics of these, but I think the important thing is lots of states, 20 states, are really stepping up and saying, we've got to solve this problem. We need to do the same.
Thanks, Vicki, and thanks to you as well, Stephanie. So I'm gonna ask a couple questions. I mean, you guys presented such amazing material that there's a lot of questions that come to mind. But let me start out with something that you both touched on a little bit, which is when we have these affordability challenges for households and families, it does spill over into other aspects. You mentioned health, you mentioned other financial stresses. Can you talk about those a little bit more? Maybe Stephanie first and then Vicki?
Yeah, I think it's really important that housing is not this own little silo and that it has huge consequences for the rest of the budget and the health of a family, of a household. But it also has implications for transit. It also has implications for employers. Think about your employees who are living far away and might get to work late 3 times a week. That seems really annoying until you understand that they've been traveling for 45 minutes or an hour and through a train interruption and a snow something, and you might have a different take on that. And so it's in everybody's interest that we all have a stable place to live. It makes our economy run smoother. It reduces need for emergency services and public assistance. So there's, the moral good reasons why you might want to, make sure Alice is in stable housing, but then there's also your own self-interest of having an economy that runs more smoothly and can, that's the basis for ability to grow and have more prosperity.
Let me just add on to that by saying, where you grow up, where you're born, the zip code in which you're born determines so much about what happens to you in the rest of your life. Your health outcomes, physical health, mental health, your schooling opportunities, your networking opportunities, the kinds of jobs that you get. It affects every aspect of your life. And as Stephanie says, it affects every aspect of what cities need, what states need, what jurisdictions need, our workforce, our essential workforce. How close are the firefighters that we need in a fire, right? Where do they have to live, and how long do they have to travel to get here? Do you want the person who's, the emergency room nurse to be traveling an hour and a half before she even goes on duty, right? Those kinds of questions are all wrapped up in the issue of housing affordability.
That's great, thank you. A lot of these issues have become, as maybe Skylar mentioned very prominently, very, very prominent right now. A lot of things have happened since the beginning of the pandemic that have made them worse. But my thought is that these actually are long-run problems that have been around for a long time. Do you both agree with that? And maybe, Vicki, you could start with a little perspective on that for us.
Yes, absolutely. This problem has been growing over the last few decades because we haven't been building the amount of housing that we need to build, really since the 1980s in New York and in many, many places across the United States. So every year we've dug the hole a little bit deeper that we're in, and it's very, very difficult now to get out of that. But it's not a new problem. Even the problem of, people tend to dismiss the concerns that I raised about the number of people leaving places like New York, Los Angeles, other places. But and people say, oh, that's about the pandemic, or it's about work from home, that kind of thing. No, actually, since 2018 in New York City, we've been losing population long before, in relative terms, the pandemic hit us. So these are long-standing issues, really coming from a lot of different sources, but we changed our basic philosophy about land use, I would say, in the 1970s and 1980s, where it became a process and lots and lots of veto points, and that's had consequences.
Anything to add there, Stephanie?
Yeah, I think that there are some other trends layering through it with the change in demographics. Household sizes are getting smaller. The baby boom generation is coming through. There's fewer children. So, we've got that changing need of housing. And then I agree that the long-term zoning regulations were created for one set of demographics and lifestyle, and many of those have changed now, and the zoning has not kept up, so exacerbating an initial problem.
I would like to stay here for about one more hour and ask these women questions about their expertise. This has been so interesting. The presentations were great. I'm sorry we didn't have time for more questions, but thank you so much for coming and telling us about what you know. Alice, and the work that you've done as well, Vicki. Thanks again to both Stephanie and Vicki.
Thank you, Andy. Thank you, Stephanie. Thank you, Vicki. Vicki, as you know, is with the Furman Center, and we've been really privileged to work with the Furman Center on a few events focused on affordable housing. For example, faith-based solutions, faith-based organizations as developers of affordable housing. As I've said, this event is presenting these issues and solutions at a high level. Thank you for the level setting. Thank you for the solutions. I view this as an amuse-bouche for a menu where going forward, we're going to have more events going a little deeper on affordable housing. We're putting a stake in the ground and hoping to address the issue further going forward. I'd like to invite the next panel up. The next panel will be moderated. Who's on the next panel? Oh, yeah, Tom. And right, come on up. Our next panel is going to address the issue associated with housing in America, and that's the supply issue. If we had enough housing units in America, we wouldn't be having this event today. Our next panel is going to tackle this issue, but first, I'm going to introduce you to Thomas Yu, who's going to give a Fed talk. Thomas is the Executive Director of Asian Americans for Equality, which has developed over 1,200 units of affordable housing for low and moderate families. Welcome, Thomas Yu.
And I'd just like to thank President Williams and his team for coming, having that earnest effort to, hear from the grassroots and visiting some of our affordable housing projects out in Queens last month. So good afternoon. My name, again, is Thomas Yu, and I'm the Executive Director of Asian Americans for Equality, or AFI for short. We're a 50-year-old nonprofit community development organization, and we provide a lot of linguistically and culturally accessible programs serving the approximately 1.3 million New Yorkers of Asian descent, and actually all those who seek our services regardless of race, background, or origin. And to give an idea of what 1.3 million is, like imagine if everyone in the Bronx or almost everyone in Manhattan were Asian. That's like the size of that population we're serving. And we're one of the few that are developers targeting that population in New York City. And it'll also mean like just that population alone would be, if it were a city in the United States, it would make the top 10 city in terms of size. So that's the scope of some of this. And we have one of the highest poverty rates, which is surprising even to many of those in our own community. So that's why I'll talk a little bit about what we're facing, and it's going to echo a lot of the speakers you've heard before, but I'm going to give a little more of like a New York City specific background. As we have preserved or developed over 90 buildings in Manhattan, Queens, and Brooklyn, and kept them all 100% affordable, we are really trying to help the most vulnerable, the low income, very low income folks, and also like moderate income, those who are trying to get a step up. We are recognizing the fact that many of our neighborhood residents, like you and I, are hardworking, they're tenacious, and they're striving for the American dream of freedom, security, and economic mobility. We anchor such household economic mobility on the foundation of creating and preserving affordable housing assets as like the foundation that you mentioned, Steph, as like that's like the keystone of like where everything sprouts. Without that predictable and safe and secure place for people to live, families can't plan, they can't work to save and learn trade skills or educate their children, open a small business, or eventually, graduating to really achieve that quintessential American dream of home ownership. As such, to develop that continuum of economic economic mobility, we also operate two nonprofit community development financial institutions, or CDFIs for short. One focuses on capital lending to small business entrepreneurs, and the other one is for home buyers, mostly first-time home buyers, looking for additional support, equity, and technical assistance to purchase that home. But as you heard now from many of the speakers, all this is coming with ferocious, headwinds. To give a little sense of like what the average person in New York City specifically has to come up against, to quote, a few and paraphrase a few benchmarks from the New York Times Housing Crunch series. The median renter household in New York City earns about $70,000 annually. And that means an affordable rent is roughly around $1,700 a month. But median rents in Manhattan and Brooklyn, for example, easily are double that. 500,000 New York City households pay more than half of their income to rent alone. So when we saw that breakout under that Alice chart, which I love, like when you see more of that segment is devoted to housing, everything else, becomes shortened, or they forgive, they kind of like overlook things like food. Like they go hungry a few meals, and we're seeing that in a lot of our food pantry services, where there's more and more people lining up for that. And along this backdrop, even if you had the means to kind of rent, there's only 1.4% vacancy, apartments available for rent. So even for those with the wherewithal, it's a really tough market. And additionally, here are some of the things that don't always make it into the kind of recorded data. And here are some of the things that we see as, grassroots operators that I thought would give you a little deeper sense of what some of this, our segment of the population is facing. You heard from Vicky Bean that a lot of folks are leaving because, they just can't afford to live here. And of the very, very low income folks, particularly immigrants in our communities, they're hard to track because they avoid census counts. They don't like participate in a lot of like official demographers, studies. But anecdotally and from our own kind of field work, we're seeing that of the very low income, particularly immigrant folks, they actually can't afford to leave. Their jobs, their job opportunities are still best, in the New York City, within the 5 counties. So where are they going? What they're really doing is they're overcrowding. We go into apartment units where it's like a 1-bedroom, and there's upwards of like 15 people living in a 1-bedroom, and that's how they make that rent, segment like decrease, by just sharing that. It's also not uncommon now to see that sometimes these households living there, that they're not related households. Like people have to like bunk together with strangers. And in the most extremes, you'll see folks renting just a bed, within that apartment. And they rent it based on time shifts. If someone, let's say, is a dishwasher that works the night shift, they are just paying to sleep there during the day, and then they switch with someone else coming back, and then they go out to wherever, and then do their night shift, and then come back. And so you see very, very tough conditions, and sadly, there's a lot of children also growing up in these units where it's just like crowded. There's no open space. It's easy for us to track that. Sometimes during my building inspections, one of the, like, if I go up, an iconic kind of New York City walk-up tenement building, you go inside, I can easily tell there's like overcrowding in many of these units when you simply just look at the doormat in front of each door, and I could count how many unique shoe wear is outside, like whether it's like small kids, different gender, estimated, and then I could see like, oh, that's at least a dozen different people living here, because of all the shoes they left outside. So that's like a really kind of like back of the envelope ways that we as a nonprofit can gauge some of the stuff that really isn't recorded. I also want to talk a little bit about what it means for small landlords, because we don't often think about landlords as well. And in New York City, it's a very pro-tenant place, but we also see that small landlords are having a really tough time maintaining their housing, many of which are naturally occurring rent stabilized housing. We, on the whole, probably get less tenant-landlord issues from smaller landlords. It's really that we're hearing from a lot of them that particularly those who are legacy landlords, meaning they've owned a small building through a family and has passed to the next generation, they're throwing in the towel. They say, I can't really do the taxes, I can't upkeep it, particularly after COVID with a lot of rent revenue loss. And they're getting purchased by much larger real estate focused private equity firms or larger developers, and that's when we really see the landlord harassment coming in. And so that's another impediment and pressure on our tenant population, because that's when they start coming to our offices seeking tenant organizing help. And I'm going to mention later how we work with some of those smaller property owners to help them preserve, because what happens is that they also, because of New York City's mixed use character of a lot of the buildings, you do have ground floor storefront. Those are struggling as well, right? And so how do we make sure the fabric of each neighborhood stays? It really depends on the relationships that these long-term smaller landlords had with their residents and the legacy commercial small businesses as well. We, as I mentioned earlier, also have a CDFI that works with small business owners. And you may say, why are small businesses crucial to housing situations? We are seeing a lot of small business owners, particularly immigrant small business owners. They're tapping their home equity line of credits to plug into flailing businesses. They're tapped out on credit card, borrowing. They borrow from their friends. And when that small business fails, they're going to lose their home. So losing that small business is also becoming a housing issue for us. And so to the extent we're lending to the small business or to the homeowner is actually part of a continuum of trying to save that neighborhood. And it's very telling that one of the most frequent use of our small business loans is to pay off predatory lending that they've gotten from loan sharks or credit card debt. Lastly, I want to say climate affects housing supply. We're seeing a lot of flash flooding in a lot of the neighborhoods we work in, and that has led to fatalities we've seen in illegal basement units where those folks have been drowning in them, and also in coastal communities where there's more frequent just flooding throughout the area. And what I think I heard someone mention earlier that, I think it was you, Kyle, that a lot of people are paying cash up front. We're seeing that also in the immigrant community because they're pooling all their cash to purchase a home because they're less savvy or they're not able to get a mortgage. And what's happening is that the homes that they're buying in are now all in flood zones. We're seeing, for example, parts of Staten Island where, let's say, Chinese immigrant communities in Bensonhurst and Bay Ridge are actually buying out there without knowing the fact that those are all in flood zones. And because they're paying all cash, it doesn't trigger that requirement by a lender to say, you must have flood insurance. So they're going to find out in a rude awakening in the next kind of like superstorm cycle. So that was like the apocalyptic story of what's happening. But there are some very quick examples that we've been doing to kind of like stem and heal and patch some of that. Of course, we are just one nonprofit. We can't do it alone. We need all these partners. And one big thing is like zoning. Like Vicky kind of like nailed it in the head that we are really way behind with like some of like, increasing, removing some of the barriers to building. You just can't subsidize your way out of it. There's just not enough money. We do have some of those programs where we're building limited equity co-ops and preserving, some city housing stock. We take advantage of economic downturns. Like, don't waste a good disaster. Unfortunately, where we started out in Lower Manhattan, we've had 9/11 terrorist attacks. We've had Superstorm Sandy. We've had a Con Ed utility. We had most recently the pandemic. Every time there was, and then there was also the financial crisis of 2008, right? And so every time that's happened, we work with the city or the state and federal government to acquire and preserve naturally occurring privately owned buildings and then just lock them into affordability. So those are some examples that, like, hopefully we see the devastation in LA. They're thinking along those lines now that, like, unfortunately, it's a clean slate. The City of Yes that just passed, that's like long overdue in our opinion, and things like accessory dwelling units. One of the things we're going to try to figure out with the state and city government is how can we use our homeownership CDFI to bridge some of the capital costs homeowners are going to need to develop that accessory dwelling unit. We hear that many of those may be used for, a little bit of income for the homeowner. I suspect as well that with all these overcrowded families, it's just the next generation. They're kind of adult children that need a place to live, and they're just kind of like, oh man, I'm too close to my mother, and they're gonna have that next step of being in that granny cottage. Just a little distance, but it's like a small baby step to kind of like true home ownership down the line. We're also doing a lot of flood resilient designs that we're seeing in around the world. Some of the things that we saw in Japan as a more economical and efficient way of lifting and bringing housing out of flood levels. So I could talk forever on that, and I don't want to get into the next panel, but there's so many other things that we're doing, and they figured it out. They have tsunamis all the time, and they've done it in such a faster, economically, and actually, frankly, aesthetically pleasing way. So those are just some examples that we're doing, and I think the experts here, particularly, we've partnered with Kirk and built some of those things we're talking about, and they're going to be better suited to that.
Thank you, Thomas. And from one Thomas to another Thomas, Tom Riley, head of corporate real estate here at the New York Fed. Who else knows more about real estate than him? Take it away, Tom.
Thank you. And thanks again, Thomas. So I'm Tom Riley. I'm head of corporate real estate for the New York Fed, which includes the operations of the facility that we're actually in today. I have the great pleasure of moderating the panel here. We're going to be talking about some of the best practices to be for addressing increasing the housing supply for low and middle income families. Joining me is Kirk Goodrich, the member and president of Monadic Development, and he's also the host of a podcast called The Housing Problem. And we also have Jason Brom, the director of economic research at the New York City Controller's Office, and the co-author of a recent report from last year, New York City's Housing Supply Challenge. Welcome both Kurt and Jason. And Jason's a former colleague of the New York Fed, so welcome back for the day. So let's get started. What do each of you see as the most common barriers to increasing the housing supply? And we can talk about it broadly, but then also specifically for the city and its boroughs.
So, sir, first of all, thank you for the invitation, and good afternoon, everybody. I think the barrier to housing supply and housing creation in the quantity and at this pace we need it is the same barrier to entry that Black folks face in, being able to vote, and the same barrier to entry to school segregation. It's people who are fully embracing their comfort and status quo at the expense of everyone else. I think it's the same problem. It's not different. And fundamentally, the reason I embrace City of Yes, the Charter Revision Commission, mayoral control of schools, is that the antidote to that is an executive branch that has the ability to act like there's a housing emergency. And I think I started my career when I was 24 years old as an organizer, doing bottom-up, sideways planning, trying to build consensus. And what I've learned over the last 32 years, engaging communities, trying to convince people to do, what was best, is that at a fundamental level, there are folks who have what they want and have no incentive to do anything different. And to me, that's not a race issue, because I just finished a rezoning or a series of conversations in my neighborhood, which is a Caribbean neighborhood, over the last 5 years. And the language people use, we don't want those people, who's gonna live there, what about the noise, the buildings are gonna block my views, that's the same language you would hear any place in the city and in suburban communities. And I left those series of meetings after 32 years of community engagement and enjoying the opportunity to engage people, to educate, to inspire, to encourage, hating the experience and realizing for us to make a difference so that we don't have 87,000 people living in shelter, 32,000 of which are kids, 100,000, 10% of public school kids facing homelessness, that with an exodus of essential workers, out of our city, if we want those trends to change, we're going to need to force people to do what they don't want to do. And so the idea, if you listen to the City of Yes hearings and you've been in any kind of entitlement or rezoning in our city, and you saw what happened to the governor when she tried to move forward with a housing compact and get every city and community to bear their fair share of housing, is all a common thread, which is no one wants to endure an ounce of inconvenience to relieve the suffering of other people. They have no interest in it. And for us to move forward, we're gonna have to empower our mayor, whoever is mayor, and our housing agency personnel and planning personnel to be able to partner with finance and developers and other folks to build more housing sooner. And any solution that involves lengthy public process and discourse is disrespectful to the people who are suffering. And the example I always use is for people who are middle class and upper class who travel, we check into a hotel room, we don't like the room, we won't let our families spend a day there. But we're willing to have people live in shelter, leave our city, to endure 6 years, 8 years of debate on entitlement, living wherever they live, because at a fundamental level, we don't care enough. We care less about other people's kids. We want less for other people's kids than we want for our own. I'll end with this. There's Chris Rock had a movie called Head of State, which was a funny movie. And the guy he was running against for president had this slogan: God bless America and no one else. And guess what? That's what we say. When we got our house and we got our jobs and our kids have their degrees and they're taken care of and our friends and neighbors are taken care of, the world could burn down around us and we don't care. And so I view the number one problem with respect to housing supply, fair housing outcomes as being the same, which is we want the sky and the moon for our own kids and our own family and absolutely nothing for anybody else's kids. Because if we cared as much about other people's kids as our own, we would be crushed by the 32,000 kids in shelter and the 100,000 kids who've been homeless in a typical year. And we're not crushed. And therefore, it's the same year after year. I forgot my notes. Where's my notes?
Thanks, Kurt.
I'll just say that I think that captures what I was going to say, which is pretty much this NIMBYism. And it's actually, when I used to be at the Fed, we traveled around the district, and this is a problem not just in New York, as I'm sure you know. And I would actually say it's a little less of a problem, or I should say it's more of a problem even outside of New York. I think in New York City, zoning, a lot of which is I think you're right, is addressed by the city of Yes. It should help a lot.
Thank you. I think it ties back to the raising earlier about the word compassion that you men practice. So can both of you either share what you see as some best practices maybe we can highlight that have or could increase the supply of affordable housing?
So I think, should I start?
Sure.
So I think I think it's important first to increase the supply of both affordable housing and market rate housing. They're both tremendously in demand, and I do think the city of Yes, which eliminates a lot of the sort of constraints on new construction, should help a lot. One of the ways that we look at how much housing should there be, or how do you know how much of a housing deficit there is? We did in our report that you had mentioned from early last year, looked at trends in employment and housing stock. And the reason we use employment rather than population is that population can actually be very strongly affected or limited by the housing stock. So if you see a lot of job creation, but you don't have enough housing, you sort of get into a situation where there's a housing shortage, which is what we've had. And since 2010, between 2010 and 2023, the housing stock has increased by 10%, and employment, even with the pandemic drop, has increased by about 25%. And so you have this deficit that if housing stock growth had kept up with employment growth, you'd need another, we did the calculations, I think, another 370,000 units. Now, City of Yes, in addition to the 40,000 kind of trend growth that we've seen in the housing stock, which is very slow, City of Yes is expected to add maybe 80 to 100,000 units, but that 370,000 is, that's a lot of ground to make up. And so I think the City of Yes is good. I think we need to do more. I'll leave it there.
One of the things that I've been focused on more and more, I think in the affordable housing world, we've always, I think, prioritized the poorest and most vulnerable, whether it's seniors or people with mental illness or kids. And I think that's meaningful and it's important. As I've gotten older and I've seen places like New York have the kind of exodus that's been described today, where working people leave the city in droves or have hellacious commutes, that's really troubling to me. Growing up in a working class family, my mom worked on tray line at Downstate Hospital, but when you look at police officers, firefighters, people who, sanitation workers, people who drive trains and buses, who work in hospitals, at a fundamental level, our lives are possible, our city is functional because of those individuals. If you ask me who the most important person on a plane is when it's at 30,000 feet, it's the pilot. It's hard to hear this and say it. The most important people in our city are the people who make the city run. And if that's true, then I would say that we have to amend, revisit what our priorities are in the affordable housing world. And I'm respectful of right to shelter, and I've had family members who are close to me, even now, who have serious and chronic mental illness, who are out of the shelter, in and out of the shelter system. My wife has been in shelter twice. But if if at a fundamental level, we're not prioritizing the housing needs of the people who make our city work and function, and we're allowing them to be in a situation where they live, an hour and a half away, their quality of life is awful, and we're hollowing out an essential component of our workforce. So we're paying people and they're living far away. Their quality of life is not great. It's bad housing policy, it's bad economic development policy, it's bad social policy. And I just think we're paying the price. When you look at the quality of life in our city, we are paying the price for a lot of things, but I think far more than anything else, we're paying the price for forsaking working people for generations. And I don't know how you operate a city, a healthy city, a growing city, when working people are not living here in the way they did traditionally. And I think that's really important.
Thank you, Kirk and Jason. So just, Jason, with some of the report and the work that you had done, you had highlighted some things with the working from home dynamic, and anything you want to highlight there and things to emphasize or as an opportunity to increase supply? Or?
Sure, and I think Vicki and Kyla touched on this also. So a lot of people are wondering, well, if the population's going down, why do we have a housing shortage? Why are rents like skyrocketing? And one of the main issues is that, and this is one of the reasons why the housing market really tightened dramatically early in the pandemic. It was not the pandemic itself, but rather the secondary effect that I would say that it created this huge trend toward remote work. Once you have remote work, suddenly your home, you may have had like a little home office, but that becomes a more kind of necessary thing, not for everyone, because some people have to go to work every day, but for those who can work at home, it just creates this huge increase in demand per person for housing. And we saw it in New York City. The decline in the population that 5% or so that we've seen since the pandemic is likely to get a little bit revised away. In other words, there's reason to believe that population hasn't actually declined quite as much as the census numbers indicate, and that it's probably on the rebound in 2024. And that's why when you look at the latest housing and vacancy survey, you see a historically low, they call it a vacancy number. I call it availability number because it's the percent of the housing stock that's available.
So, thanks, Jason. Just to close up, Kurt, if there's something you just want to leave us with as a thought or a possibility.
Yeah, I do. So the term filtering, which has come up on the podcast, and I learned as a housing undergraduate, is a really important term. Because what it means, in order for a housing market to be healthy, you need filtering. You need the creation of new housing product that allows people, as their income goes up and as their needs grow, to move into new housing. That then leaves older housing stock for people who are at lower income levels to move into. And when you have a housing market where there's not the creation of new housing stock, what happens is people either leave the market or they compete for older housing stock. And where does that leave folks at lower income rungs? How does a healthy housing market manifest itself? And what I would say, an example I always use is, my parents came here in '62. They lived in an SRO for 4 years. Family grew. They moved to a bigger rental apartment. They moved one more time to a bigger rental apartment. And by '74, they bought a home. That's 12 years. Working people. And in order for me to say we have success or vision for a healthy housing market is when normal working people can enter our housing market and move through it in the way I just described. And when that can't happen, you don't have a healthy housing market. When people, instead of doing what my parents could do in 12 years, starting from scratch, have to leave the housing market or live in untenable conditions, your housing market isn't healthy. And so, to me, that's where we need to be at a really fundamental level, or we don't have the housing market that we need to have in New York or elsewhere.
Thanks, Kurt. Jason, any
Trickle up
closing?
theory, sort of.
That's
It's the trickle down theory. I don't think we all agree with, but the trickle up theory in housing, I think, is one way to describe that. Yeah, I agree. I think that it's just very clear that New York City has a very severe housing shortage. One of the things I should add that has sort of, it could have been even worse, is that our sort of sixth borough, which is Jersey City, Hudson County, over the years has added a lot of housing, and that's taken a little bit of the pressure off New York City. But the building 30 to 40,000 homes a year net is not adequate to have any kind of functional housing market in the ways that you describe. And so, I would just say another. I'm just going to put one more statistic and then I'll stop. The rate of overcrowding. There are a few ways that people can respond to a housing shortage. One is they can leave or not come. Another is they can kind of double up and crowd. Another is they can become homeless, and we definitely don't want to see that. And so there's another one, I'm forgetting what it is. But basically, the overcrowding, I think, is a very useful signal to assess how severe the housing shortage is. And I think you have about 10% or 8% of homes in the latest housing and vacancy survey with two or more people per bedroom. So that is, or no, more than two people. So in other words, a studio with 3 or more people, a 1-bedroom, et cetera, like that. So it's that pretty much sums up where I stand on it.
Well, thank you both.
Thank you.
We'll turn it over.
Hey, Jason, I'm going to put you on the spot. Can you please explain, thank you, Tom, can you please explain to the audience what the City of Yes is?
Oh, the City of Yes is, it's a I'll give you the very short version. It's a multifaceted initiative to reduce zoning restrictions, to have tax incentives for converting commercial office buildings to residential buildings, also tax incentive for new residential construction. But just as an example, I forget who talked about this. I think it was the previous panel that, when you require each unit to have a certain number of parking spaces, we're in New York City. We're in, if there's one city where you don't, where you can get around by mass transit, it's New York City. And so they've eased a lot of that in most areas. They had to, everything's political, so you have to negotiate. So there were some compromises made, but it really does a lot to alleviate those kind of restrictions. And one other, just as an example restriction that it alleviated, for example, is being able to have secondary housing. So like if you have a garage, you want to convert it into, a mother-in-law or a guest home, you can do that.
Yeah,
So
thank you for that clarification. Thank you.
Short enough, maybe.
Thank you, Kurt. Thank you, Tom. Appreciate it. So as we've been saying, this supply issue is not going to be addressed overnight. And there are going to be consumers, potential renters, potential home buyers who need to navigate this terrain. To talk about this is our next panel. Phyllis, come on up. Roland. And Jack Goot, who is the head of communications and outreach at the bank, is going to moderate the panel. Thank you, Jack.
Hello, everybody, and thank you for being here, and welcome, Phyllis and Roland. As Otho alluded to, I mean, as has been covered, we all know that housing supply is probably the biggest challenge that we have, and I think Jason made a very good point. It's no longer about affordability, it's just as much about availability than anything else. We are far behind. This is not just a New York City problem. I have to say that in our outreach throughout our district, it is something we hear from the smallest municipalities to obviously the big metropolis in New York. So it is a conundrum. But as Otho alluded to, some great ideas. There are solutions, but this supply issue doesn't get fixed one day to the next. And in the interim, there are still individuals and households that have to contend with the high price of whether it's rental or home ownership. And the folks that are here with me today are going to talk about some of the options and some of the ways that those individuals, those households can hopefully get into more permanent housing on a sustainable level. So thank you both. We have been running a little bit behind, so I'm gonna keep my remarks to short, but I'm gonna ask each of you to introduce yourselves and talk very briefly about what you do, and then we'll talk about some specifics. So why don't we start with you, Phyllis?
Hi, everybody. Very happy to be here. And you know what I like about all of this? As we hear about the challenges, it's the passion that everybody has, the passion to get things done. So my name is Phyllis Ford, and I work at HUD in the Office of Housing Counseling. And what we do in the Office of Housing Counseling is maintain relationships, compliance, oversight, and funding for counseling agencies, about 1,400 of them around the country. And those counseling agencies work with folks who have housing issues, either folks who want to buy a house, folks who are trying to keep their house, folks who are trying to find rental, folks who are not being fairly, and so that they need some help in navigating the system. So that's briefly what we do.
Thank you very much. Roland?
Hi, I'm Roland Hobbs. I'm co-founder and CEO of a company called Stake. We're helping people get banked and pay their rent and get cash back when they pay rent. So we're a venture-backed startup. What we're building is the future of banking services for renters. So if you think back to the 80s and 90s, there's a decline in community banks, right? There used to be a bank down the street that'd be able to help. There's less of that today. So we provide free and equitable banking services. Renters get cash back when they pay the rent on time, which helps owners reduce delinquency and sign more leases. And what's amazing about this is just a little bit of cash back. It goes anywhere from 2% up to 10% of cash back that they're getting every time they pay their rent, can help them meet their everyday bills. With that, they're getting a Stake Visa debit card. That's a debit card, not a credit card. They can build their credit by being reported to the 3 credit bureaus. So we're on this mission to accelerate renter wealth by helping them every single time get something back and build a stake in where they live. So really excited to be here. It's kind of unusual for me to be in front of such a mission-driven crowd, because most of the time I'm pitching for profit and going to the big private equity landlords that we were mentioning before. Those were our clients. So we're actually getting the big landlords to agree to pay for cash back for their renters. I'm really excited to be here. Thanks so much for having me.
Very interesting, too. Different but complementary approaches. And Phyllis, maybe you can talk a little bit more about the housing counselors and the type of service or support that they provide. Maybe there's an example that can illustrate what's available to folks. So how do they go about their business, and what's available to the counselors? What are their tools?
Well, actually, we heard a lot about tools that are here. When we heard about cashback opportunities, things that are available that the counselors have to keep themselves educated about, so that when they meet with the family, and each family may have a different situation, the counselor is able to assess what the needs are, where you are now, where you need to be, what is out there. Can we get you some rental assistance? Oh, you're not being treated fairly by your landlord. Let us get you some legal assistance. Oh, you want to buy a house, but your credit score is like 300. This is what we have to do to get your credit score up. So those are the kinds of tools that the counselors have to use in order to achieve the goals of their clients.
You both mentioned credit as a burden, credit as an impediment. What about you alluded to it, but if you could talk a little bit more about how at stake, how your approach is helping those folks build credit, and how effective has that been?
So Freddie Mac and Fannie Mae put a program in place to be able to report your on-time rent payments to the 3 credit bureaus. Stake participates in that. We're not the only one to participate in it. There's others as well who participate in it. What the key thing to me, and going to does it help or not, is you have to be able to make sure that the renter is aware. It's going to the point of counseling. They have to know what that credit can do for them. So we start with cashback. And if you're struggling on your bills, the cashback gets your attention. So I'll use like a highly behavioral sciences term. We nudge, we nudge people, right? To be able to get them to be able to pay attention, and then, hey, your credit score is going up as well. So on average, we're getting 44-point credit score increase at the end of their lease. It's a big increase for folks, right? And so huge kudos to Freddie and Fannie for putting this in place because they've created a seismic change. But then what we could do in this nudge is let's get their credit score increases, we get them banked free and equitably, right? They're not paying any overdraft fees, any minimums, et cetera. That means they're not going to a payday lender down the street to be able to pay their rent, which has huge fees for them. So you kind of begin this cycle of moving towards positive financial empowerment as opposed to the reverse, right? When you're suddenly, you don't have any credit. That makes it harder for you to be able to, not only for home ownership, but a whole plethora of things that are going to become more difficult when you don't have that. So yeah, we start with a cashback that helps people be able to pay attention. We get a lot of attention with the renters and nudge them towards that better financial behavior.
So I want to go back to something the previous panel touched on, which is I think we often think about these services as appropriately available to the most low-income or perhaps no-income folks who are struggling. But as we've heard, I mean, in New York in particular, we have a problem where the working class, it's become unaffordable. So I'm curious, are these counseling services, are they limited? Are they available to most folks? And has there been a take-up, or is there some sort of stigma attached to that? And similarly, is something like Stake available to everybody, regardless of where they may be in the income spectrum? Because this housing crisis really is unique in a way that it's very broad. It seems to be very broad-ranging.
Well, no, there's no income requirements or limitations on being able to access counseling services. And you touched on a really valid point when you asked if there was a stigma. As we try to let the world know that this is a resource out there, we had to find ways that it could be marketed so that people don't think that they're going through something that is not happening to everybody or could happen to everybody. So there is no stigma. If there is any, we're trying to remove it, and it's available to any income category.
So we power about 150,000 homes in real estate speak units, which I always hate in their homes. And most of those are naturally occurring affordable market rate. But about 15,000 are capital A affordable or subsidized homes. We also work in Colorado is doing a really interesting program called Proposition 123, where they guarantee cash back to every renter in an affordable property that they're building. So the profits that are going from, that the government's making from building affordable homes, they're feeding back to the renter. We also power something called the Renter Wealth Creation Fund, which is Enterprise Community Partners Fund, as well, to be able to give cash back to renters and share in profit sharing. So we're doing more on the capital A affordable, but I think it's for us, and in all transparency, right, we're a for-profit group as well. So it's harder, I would say, without the government, localities, state governments getting involved in affordable and capital A affordable. We get more in the naturally occurring affordable for most of our work today. But I'd love to see more things like Proposition 123. So folks who are here learn about Prop 123, please push it in your areas. It's an incredible program because it's really helping those folks be able to get cash back, get free banking services, and really become that community bank in their building.
So we focused, thank you. We focused quite a bit on rentals, and again, we're, as Otho said, this is the appetizer course. There will be many more conversations to go. But one of the sort of pillars of the American dream is home ownership, with prices where they are today, and the interest rates still elevated. What are some of the steps? How do you help new potential homeowners? What's available to them in terms of both building the credit but also accessing funding? What advice do you have for wannabe homeowners in this environment?
My strongest advice, and I'm sure it's the advice that comes from our counselors, is to be patient and be patient and be diligent, because it's not an easy trip. It's not an easy trip. Even if you're middle income, if you're looking at dollars and cents way above what would make sense in terms of, I make $70,000 a year, I make $30,000 a year, but you want me to come up with $40,000 as a down payment. So you have to be patient, you have to be diligent, and you also have to be educated. And that's where the counselors come in, because they help you be educated about program opportunities that are out there and what you have to do. I want to give a clap out to Federal Reserve, because they've done programs dedicated for folks to get, how do I learn how to save? How do I train myself that, yeah, I like that bag, and I know Beyonce has one just like it, but, maybe I'll put off getting that bag today. Maybe I'll put that aside. Or the other thing that is really important is not to be discouraged, because I said it's not an easy journey. And so that's what the counselors do, that constant relationship. They're not therapists, but close to it. Constant relationship, building you up, knowing, okay, this may not be going right, but okay, we can do this. Look, here's a new program. This is what you have to do. Oh, maybe we need to get your score up. This is how you can do that. Drop that subscription to People magazine and put that aside. So that's the kind of thing that are resources that are out there, but things that you also have control over yourself.
So I think that what I'll say is that obviously home ownership is really important, but I'll go to the data of what we see across our 150,000 is what people are spending the cash back on is number one is healthcare. So number one, and we're talking about maybe somebody's getting $10 up to maybe $250, but that's for the number one expense they're going to. Number two is grocery, and number three is childcare. So and that's, we talked about this naturally occurring affordable. These are folks who are probably working 2 or 3 jobs. Maybe they're doing a gig economy work and whatnot. When they are coming into the Stake app, which is web, iOS, Android, they can come in, we ask them a question of what they want to be able to save for, because the aspiration of home ownership is big, but the reality of what's happening on the ground is very different. So I think that that nudge that I was talking about, when we talk about savings and we increase savings for people about 8% year over year, you may be talking about somebody going from $250 to $500. There may be that first steps that need to happen. But to the point about counseling, that means that if somebody's learned to be able to save that amount, they're on the right path. There's a path then for that. They've learned how to be able to save and do something with that that's going to be more impactful. If you're dealing with somebody who's close enough to already has a savings, a down payment for home ownership, they're going to find the resources. They're already motivated. They're there. It's that earlier group that we're really concerned with. And frankly, on the flip side, if we're going to go over to the landlord, I'm going to say that word often because normally I have to say owner and operator. Landlord, it's good for them. Savings means that people aren't missing rent. Savings means that somebody and 80% of NSFs, 80% of NSFs, that's non-sufficient funds when they're paying rent, are for under $50. So it's these smaller amounts, the smaller nudge that matter to get the ball rolling, and I think we need to focus more there.
Terrific. I think we're out of time, so I'm going to just ask if you have either of you, if you have any sort of parting thoughts or ideas that you want this audience to walk away with. And obviously, this is a conversation that will continue. So I'll look to you, Phyllis, first.
Very briefly, I really want folks to recognize the goal may be to get the house, the goal may be to get the apartment, but you have to have a goal to keep it. And if, in fact, things are going astray, the housing counselors are there. The organizations are there. The banks are there to help you. So as soon as you look and see that there is a problem making that mortgage payment, oh, I have to borrow $10 from somebody, then you need to go to a source for some assistance so that you can work it out. We don't want to lose the home that we took so long to get. So, and don't get embarrassed. Recognize it happens and go do something about it, getting some assistance.
I think the counseling side of this is so important, being able to get that assistance. I think also what we need to be able to get is there's no shortage of debt solutions for renters and payday lenders down the street. We need to be able to make access to ways for people to participate in contemporary commerce, make it easy for them to be able to get, probably, many people here have in their wallet a card that's giving them cash back. That can help, and that is the beginning of being able to have access to a bank account, being able to pay the rent without high fees, et cetera. So I think that housing is obviously, and supply is super important, but we have to be able to surround with the financial services and the digital financial services to be able to help renters. But thank you so much for having us.
Thank you both very much. Now, before we conclude, thank you very much. It is my absolute pleasure to introduce our first Vice President and COO, Sushmita Shukla, who will offer closing remarks. And I want to take a moment to thank our organizers and all of you for being here today. So thank you, Sushmita.
Good afternoon, everyone. Can everyone hear me?
Yes.
I want to thank all the panelists and participants and speakers today. I love seeing the passion and energy you have, not only for the issue, but also in helping our communities. Housing affordability is a very important issue, and we want to see households, businesses, and communities thrive. And the discussions that we had today around this issue were informative, inspiring, and engaging. It was inspiring to hear from people who study housing and assess its impacts to the economy. It was inspiring to hear from groups who are helping families achieve housing affordability. And it was inspiring to hear about potential ways to increase our housing supply. The discussions we had today are part of a larger strategy to help those that are affected by the housing affordability crisis. And we at the New York Fed will continue to bring stakeholders together to help spark and catalyze some action. I'm excited to see how we can continue to build an economy that works for all. Now I hope that those who are here in person will join us for a reception, and may the conversations continue.